AMD had quite a dramatic session last Thursday, starting the day under pressure and falling as low as $157.79 before clawing back almost everything to finish at $161.79. On paper, the close only represented a decline of 34 cents, or about 0.21%, but the journey to get there told a much bigger story. This was a session that tested nerves, reflected sector-wide caution, and then showcased AMD's resilience. So now that the long weekend has passed and the market is back in full swing, the question is, what do we take away from Thursday's volatility, and how should we be thinking about AMD's setup for the new trading week? The initial sell-off was triggered in large part by an analyst downgrade. Seaport Research Partners lowered its rating on AMD from buy to neutral. Their main concern was whether AMD's recent wave of AI interest, with customers like Meta, Microsoft, and Oracle kicking the tires on MI300 MI350 accelerators, would actually translate into volume sales. They also flagged that hyperscaler spending on AI infrastructure may be slowing from the torrid pace of the last 12 months. Those comments struck a nerve, because the entire bull case around AMD right now is that it will capture meaningful share in the AI data center market. Any suggestion that demand might be softer, or adoption slower, is enough to shake sentiment. At the same time, broader headlines added pressure. Reports that Alibaba is designing its own AI chips hit the wires and rattled the entire sector. Nvidia, TSMC, and AMD all traded lower on the news. The implication was that Chinese firms may be able to build competitive solutions internally, reducing reliance on American suppliers. Whether that threat is real or exaggerated, the headline was enough to send sellers rushing in. Put those two factors together, a downgrade questioning AMD's AI sales pipeline and geopolitical news stoking competition fears, and you had the perfect storm for an early session sell-off. The sharp drop to under $158 looked ugly on the chart, and for a few hours it seemed like AMD might be in for a much deeper correction. But then came the recovery. Buyers stepped in gradually, and AMD steadily climbed back for most of the session. By the closing bell, the stock was down just a fraction of a percent. That's not just a rebound. That's the market telling us there is real demand for AMD shares, even when the headlines aren't favorable. Support held near the $158 to $160 zone, and technical traders will note that the ability to close above $161 keeps the uptrend intact. So what does this mean now that the market has reopened after the break? First, it shows that AMD has underlying strength. Institutions and funds still want exposure here. They aren't using analyst downgrades as a reason to exit. They're using pullbacks as opportunities to add. That dynamic is important, because it suggests AMD's floor is higher than skeptics think. Second, it highlights that we're in a consolidation phase, not a breakdown. AMD had rallied hard in recent weeks, peaking above $184. A retracement back toward the low $160s is natural. It lets the stock catch its breath, reset expectations, and shake out weaker hands. What matters is that it didn't collapse. The consolidation is orderly, and it's happening at a higher level than the last base. That's constructive for the longer-term trend. Third, it reinforces the importance of catalysts. The market knows that AMD's big proving ground is coming. The next few quarters will reveal how much of the MI300 MI350 story is real in terms of revenue, and Analyst Day in November will give management a chance to lay out the roadmap in detail. Between now and then, every analyst note, every hyperscaler rumor, every geopolitical headline will create volatility. That's the environment we're in. But the foundation, AI adoption, server share gains, PC recovery, remains intact. For investors, the key takeaway from Thursday's action is patience. If you were waiting to see whether AMD could withstand negative news without cratering, you got your answer. It bent, but it didn't break. That's exactly the kind of behavior you want to see in a stock that is transitioning from a speculative AI story to a core holding in the sector. Looking at the technicals, support is clearly in the $158 to $160 range. Resistance sits up around $165 to $167. A pushback above that zone could trigger momentum buying and set the stage for a retest of $170. Conversely, if AMD loses $158 on heavy volume, then we'd be talking about a deeper pullback toward $150. But right now, the bounce tells us that buyers are willing to defend this level. It's also worth putting the Seaport downgrade in perspective. One firm lowering its rating doesn't erase the bigger picture. Just last week, Truist Securities upgraded AMD to buy with a price target of $213, citing increasing adoption by hyperscalers and stronger positioning in the AI market. That divergence in analyst opinion shows you exactly where we are. Some are cautious about the pace of adoption, others are bullish on the scale of the opportunity. The truth will come out in the numbers, and in the meantime, the stock will likely trade between those two narratives. The Alibaba news is also worth tempering. Yes, China will continue to push its domestic chip capabilities, and yes, that represents long-term competition. But building chips at scale, with the ecosystem and software support that enterprises demand, is no small feat. AMD's ROCm software stack is maturing, its accelerators are being tested in real workloads, and its CPU share gains provide a complementary edge. That's not a moat that gets erased by one competitor entering the headlines. So as we head deeper into the week after the holiday break, the story is this: AMD remains volatile, yes, but the underlying momentum hasn't disappeared. The company is consolidating after a big run, the stock is digesting mixed analyst commentary, and the market is recalibrating expectations. But the fundamental trend, AMD becoming a serious force in AI compute alongside Nvidia, is still in place. For traders, the play is clear: watch the support at $160 and resistance at $165. For long-term investors, the focus should remain on execution: how quickly AMD converts design wins into revenue, how the MI300 MI350 ramp progresses, and what management communicates in November. Thursday's rebound was a reminder that there is conviction in this name. Even when it stumbles, buyers are ready to step in. In short, AMD's dip and recovery on Thursday was less about collapse and more about consolidation. It gave us a window into sentiment, a stress test for the bullish case, and a chance to see how the market reacts under pressure. The fact that it closed with only a small loss after such a rough start is a sign of strength. And now that the long weekend has passed, we move forward with a clearer picture. AMD is still in the fight, still building its case, and still one of the most closely watched stocks in the AI and semiconductor landscape.